But you can see here the price spikes up, comes back down. The price, look at this now. They tried to break the high and they couldn't. What did they do now? They broke the low. Look at this. In 1, 2, 3, 4 weeks, no, we'll just call it 3. 3 weeks in a row, they were unable to break the low. What happens? The low gets broken. Short-term trend is now down. Okay? That's a very quick and dirty way of describing the short-term trend. It's down. We've broken through the weekly low. The market is pushing down. Look at this. All the way through here. Not one low is broken. Look at this. Time, week after week after week, and then finally here, what happens? The weekly low is broken. The market's in the short-term trend now is down. You can't see for a couple of weeks the market trades sideways, but it's definitely spiking to the downside. What this is telling you is that, let's go, I'm going to erase this. What this is telling you is that there is some bullishness to the market. They couldn't hold the lows. Then, of course, the very next week they sell it off. But what happens? Did they break the low? No, they didn't. And look at this. The lows go unbroken. So what does this mean? Well, it gives us some opportunity now to plan. Remember, let's go all the way back to planning. If we are looking at a weekly bar, let me go ahead and zoom. Let me zoom way in here. And we'll get to the weekly bar. So we're looking at the weekly bar here. The market, you can see here, it wasn't able to break through the low. Wasn't able to break through the low. Finally, right here, this is right where we were trading the last time, as this thing was breaking out. What happened? The market tried to break through the low, but it couldn't. What this concept, remember, what this idea does, and I'm telling you, this is how professional traders think. This is the way they approach the market. They're not relying on a fancy indicator or a bunch of divergence indicators. You know, again, not that I'm completely bagging those. I think that they can be ideal for confirmation. But the reality of the market is, if traders are selling, it's going to happen on the chart a lot faster than it's going to reflect on your indicator. Because what you're doing is taking past price and trying to predict future price. And let me tell you, that just doesn't work. It always happens in hindsight. But if we're looking at the market in common sense ways, and we're looking at the lows, and we're looking at the highs for what they really are, meaning this is support and this is resistance, we can now make a plan around those levels. Because it was important that the market tried to get through resistance up here, and it couldn't. In fact, if you remember, what I was talking about was, hey, the market's back up here at this resistance level. We have to wait to see if it's going to continue to move down or if it's going to break out to the upside. We just don't know. But we don't have to know. All we have to do is get a plan. So if the market breaks above the high of this week, aren't we bullish? And if the market breaks below the low, aren't we bearish? Well, the question is, well, what about this? Look at this. Price went below, but then it went right back above. What does that mean? Well, it means you're bearish, now you're bullish. I mean, think about that. If price cannot continue going down, what exactly does that mean? It means there are not enough sellers, there are not enough sell orders for the market makers to continue marking price down. It's that simple. So let's take a look at, we'll go all the way down to the intraday chart, and let's take a look at what actually happened as the market was trading at those levels. Okay, let me fast forward here. Okay, so here you can see the prior week. Okay, this trading is right here. All right, hopefully you can follow that. So this trading is on this bar. Now you can see that at the very start of the next week, okay, here's the 5th, 6th, 8th, 9th, and 10th. Okay, so here's Friday on the 6th.